But I'm really, really excited that Jorian has taken the time out of his busy day to share this exciting CMHC program with us. And so Jorian is going to tell us a lot about this program, and if you have questions as we walk through it, just pop them in the question box. And I know he's got lots of the answers to the questions, but we'll definitely jump in when the time is right to ask him some questions. And so Jorian's going to take as much time as he needs to introduce us to this program. For those of you who have heard of it or haven't heard of it, it's very exciting, and he's had some great success with it. So I'm not going to say too much more, but Jorian de Vries is a commercial and residential real estate mortgage broker and consultant, and he's over on the North Shore, and he's worked with quite a few people that we work with, including people like Randy and Sherry. And he reached out to me a couple weeks ago and said, hey, your name came across my desk and I was thinking about this program. And I thought that was really exciting. And so we went and met with Jorian. Bill came over with me, and we went and met with him as soon as we possibly could. And he walked us through this program, and we were very excited. And so we had him over to the house last week. And gosh, we had to kick people out, didn't we, Jorian? It was like your wife was waiting to take you home, and people were like, but I have more questions. This is so exciting. So he's going to walk us through this program and tell you all about it. And so without further ado, Jorian, it's your first webinar. It's always exciting. This is a really safe, happy place. So we sometimes have technical issues that happen, so no big deal. But please, Jorian, do tell us about this wonderful CMHC program.
Sounds good. Thanks very much, Liza, and everybody for giving me a few minutes here. We do lots of financing here in the North Shore. I work with Dominion Commercial. I don't actually do that much residential. I do some private lending on the res side, but mostly our deal is commercial. So we're a CMHC correspondent, meaning that we are treated like a lender, so we can go direct to CMHC with deals, and we get slightly better rates than if you were to contact them direct. So the program we're going to talk about is the RCFI program. It's Rental Construction Financing Initiative. CMHC in 2017 said, hey, we got to do something about the lack of rental accommodation in Canada. And CMHC's mandate is to provide affordable housing for Canadians. And as everybody on this on the webinar knows, there's not a heck of a lot of that in the Lower Mainland, in Toronto. So every municipality is really clamoring for rentals. And in order to entice developers to get into that space and build some rental buildings, CMHC really had to sweeten the pot, because developers, pretty much go for the low-hanging fruit. They build something and they sell and they move on to the next project. So if there's not any money in it, they're not an altruistic bunch. They want to make dough and move on. So CMHC decided, let's make this a painless process on the application side. Let's make it a really good deal so that there's lots of take up with developers, and let's earmark some funds specifically for the RCFI. So the RCFI funds come from the Bank of Canada at cost, and what that means is typically deals are priced off of either the 5 or the 10-year bond. So the 10-year bond usually is what most people that are going to do a CMHC deal is what they purchase. But when they go to a bank, they get the bond plus a spread. So usually that spread might be somewhere between 50 basis points if your last name's Bosa, or 150 basis points if your last name is de Vries, like mine. So somewhere in the middle is where your rate's going to be. So that is still on a relative basis expensive. So CMHC decided, let's just do it at cost. So today's bond yield is the lowest actually I've ever seen it since I've been in the business. It's 0.96. So that's what the rate is for 10-year money if you were to set your rate today. So it's nearly free. I don't know how much lower it can go. And this is maybe part of the silver lining of the coronavirus and the stock market tanking, is that bond yields tend to really tumble. So people that are entering the program now can get the benefit of this really low cost financing. So how it works is So number one, they give you a very good rate. Number two, they give you a very long amortization. So typically when you're building through CMHC, they also have a conventional program. You get a 25-year amortization. And every 5-year increment that you want to add to your amortization, you pay an extra 5 basis points. So you can go up to 40 years, so you'll be paying an extra 15 basis points. Under the RCFI, they allow you to go all the way to 50 years with no premium increase. In a typical scenario, when you're building with CMHC, they also charge you an application fee. And so if we were to take the example of a $10 million bill, that application fee is about $600,000. Under RCFI, they also waive that fee, so you don't have to pay any insurance fees. And then on the cash flow end of things, typically they want to have a 1.2 or a 1.3 cover. And what that means is if your mortgage payment's $1,000, they want you to have $1,300 worth of net operating income. So they want you to have a buffer there of about 30%. Under RCFI, they lower that once again to 1.1%. So those things make the money really cheap. And then on the other side, you have the loan to cost portion. So if you're to build a rental building and you were just to go to the bank, you likely need to come up with about 30%. So if we go back to our 10-year, our $10 million build example, you'd have to come up with $3 million in order to do that deal. Under RCFI, they have a multi-step process that if you meet all of their guidelines, you can get almost 100% of cost. So under the CMHC guidelines, they're looking for things like buy-in from the city. Are you going to get reduced development cost charges? Are you going to get a tax abatement on your property taxes? Are you going to get maybe some community amenity charges waived? This is where a developer has to pay for, a park across the street or, a playground somewhere. All of those things CMHC wants to see waived or reduced in order to get the municipality to buy into it. And if you get all of these metrics on board for your program, you get a higher loan to cost. Now, we've done a number of these deals. We haven't seen one at 100%, and I think it's a bit of a unicorn. I don't think anybody's ever going to get there, but we've gotten close. We've got 95% of cost. So in terms of that $10 million build, if you were to do it under conventional terms, you'd have to come up with $3 million. Under the RCFI, you'd only have to come up with 500,000. So you can see that your leverage is huge and your return on equity would be massive. The construction portion of it as well is all rolled into the same deal. So typically in construction, you get a 1.5 or a 2-year loan, and that essentially is meted out to the project in draws. And then at the end of that portion, either you sell the project or you lease it up. And if you are going to keep the project and lease it up, you have to go out and get another loan, a takeout loan. So that takes out your construction loan. Under the RCFI, it's one loan. So it starts at the beginning of construction and goes for 10 years. At the end of 10 years, then you would have to refinance it. But during construction, you get the benefit of that really low cost as well. And during construction, it is actually interest only. So interest only on less than 1% is, well, it's really low. Do the math. So those are the advantages of the program. The other thing that's nice for developers, especially now when we're the market's starting to creep up, there's not a lot of product out there, but there's still a lot of uncertainty. So there's lots of projects that have come into our office where a guy has bought a piece of property or assembled a bunch of pieces of property and is going to do market condo, but he's not certain, what the atmosphere is going to be like in 2 years, and so there's some uncertainty there. And so we did a deal, and Liza's familiar with this one, in Esquimalt. And this particular fellow, we met at a function. We just happened to cross paths with this guy. And he had a Van City construction loan set up to build his building. And under the terms of that construction loan, he needed to get 50% pre-sale. So half of the units needed to be sold prior to him getting his first draw. So he got to about 25% and the project stalled. And at that point, he got scared and he said, you know what, I'm not certain that I can do this. And so he put the project on hold. And fortuitously, that's when we met the guy and we said, look, why don't we do an RCFI deal? So We made some tweaks to his building. Instead of market condo, we did all rentals, so there were some architectural changes, but not a heck of a lot. And that project is breaking ground soon, and we got him 95% of cost. So he was thrilled, as you can imagine. He's going to get a building that's worth a lot of money at the end of the day, and it takes a lot of the risk out of it for him. And so instead of having to come up with 30% down payment, or 30% equity, he can take that equity and go somewhere else. So that guy was thrilled. We're happy to get the deal done, and that's a very typical scenario under the RCFI. I know this group likes to maybe get in and get out, and there's an opportunity to do that as well. Liza mentioned Sherry Krause. She built a building over in Langford. She said, "Hey, this is going to be my forever building. I'm gonna keep it." But a REIT came along, knocked on her door, made her an offer she couldn't refuse, so she sold it. And under RCFI, you could do that as well. And the other nice thing is it's going to have this really low financing attached to it as well, which conceivably can make the building a little bit more valuable because it's cheaper to buy. So there is some liquidity under this program as well, because you're building an apartment building, which in the hierarchy of commercial assets is the top of the heap. Everybody likes apartment buildings, so you have a lot of liquidity there as well. So that's sort of how the program works. I'm happy to take some questions. Liza, if you got anything for me.
Absolutely. What I'm going to do is I'm going to try unmuting people and see if they have some questions, or feel free to type in the question box. I think there's a few things that are really key there that are, probably exciting for people's ears. You mentioned the bond rate right now is less than 1%.
Less than 1%. It's the lowest I've ever seen it. I've been doing this 20 years, never seen it that low.
Yeah,
Today.
It's crazy. It's 0.96%. So let me just see if we can unmute a couple people here. Casey, I've just unmuted you. Christine, you are self-muted. I can't unmute you. Debbie, Esther, you can unmute if you like. Maggie, Lori, I've unmuted you if you have any questions. Rebecca, so you may have to unmute yourself, and then I can unmute you after that if you wanted to jump on. But Lori and Casey, if you have any questions, you are unmuted. Oh, Casey's just muted himself. So feel free to type your questions in that question box. Or Lori, if you've got something, just jump right in.
Yeah,
Lori, you probably do. Go for it.
Thanks, Liza, and thanks, Jorian. Great information. Can you touch on more of the criteria that you have to follow for these loans?
Sure. Yeah, the CMHC has something called a social outcome grid, and so there's a bunch of things in there. I won't cover all of them, but sort of the highlights are they want a certain number of the units to be affordable, and so Stats Canada produces a spreadsheet which shows what the median income in every municipality is. So for Vancouver, for instance, they take the median income, they take 30% of that, and that's what they want the rental amount to be in your building. So so if you got 100 units, they want 20 of them to be at that level. So they want it to be 20% of the units to be at 30% of median income. And so for Vancouver, that number for a monthly rental is $2,063 a month. So they want 20% of your units to be rented out at $2,063 a month. And the interesting thing about that is that out of all the pro formas that we've seen from developers, every developer has said, wow, that's really high. We would be thrilled to get $2,063. We just did one out in Burnaby, and that guy's his pro forma at market is $1,850. And so that 20% cap at the 30% of household income is kind of a red herring. And many developers see that as a sort of a rent control, and to some degree it is, because they have these numbers, but because they're artificially high, they don't really make that much of a difference. So other things that they want it to be barrier free, and that just means that people that have some sort of disability, they're in a wheelchair or something like that, have access to the building and all the common areas. Another criteria that they want to see is that the building is really efficient. So right now we use the 2015 National Building Code, and they want your project to be 15% more efficient than the building code. But out of all the submissions we've seen, many of them are actually 50% more efficient than the 2015 building code. So that's not that big of a deal either. They also want it to be close to transit. They want the community buy-in, like I was saying, to get some a break on municipal fees and that sort of thing. The other thing I didn't really touch on in my remarks in the beginning was they want to have a minimum net worth requirement as well. And so they want to see that whoever the borrower is or the borrower group has 25% of net worth outside of the project. And it doesn't have to be liquid in cash, but they just want to see that the person has capacity, at least during the build. So those are some of the things that the program asks for, but none of them are really deal killers. Every one of the things that CMHC is looking for your project really enhance your project, and I think make it a better deal.
Oh, that's great. Yeah, thank you very much.
And just to jump in, Rebecca, I know you've got a couple questions, but just to jump in, what was some of the things we talked about as well with the net worth, for example, we talked quite a bit about that last week, and there are lots of ways to sort that out, right? You might want to go into a partnership with someone who already owns a piece of property, or if we're setting up the general partner as the person who's got some funds. So there are ways to make that work. And I think the other thing as well, Jorian, I'm not sure if we touched on it, but the minimum size building that they're looking at is 5 townhouse units, and I think the minimum.
Yeah, which would be $5 or $1 million loan.
And $1 million loan. So they may not approve that small. I mean, that's the kind of thing that we would want to find out a little bit in advance. If the municipality really wanted something small and we thought we could get it approved, the minimum that we can start with is $1 million. So that's not a bad starting place. And yeah, there's still, how much money is still in the fund, Jorian?
There's $13 billion apparently.
There's $13 billion in the fund. So
14, they've only got $1 billion out the door, so lots of money.
They've only got $1 billion out the door. I mean, what the hell? And you've got quite a number. You've done a few of these successfully now as well, haven't you?
We have, yeah. We've got 8 successfully either funded or in the draw process, and then we have about another dozen that are in application right now.
That's fantastic. And Jorian, I don't know if it was clear the last week either. Are most of yours in BC?
All of them are in BC, yep.
All of them are in BC, but we also did talk about potentially doing something outside of BC. So we talked about potentially doing,
so you can do anywhere that there's a
federal program. So if we wanted to do something on the East Coast with Darlene, or if we wanted to do something in one of the other provinces, it all comes down to where do they need rentals? Where's the municipality going to kind of look at what we're doing and get them on board early, and then where's the best place to be buying property? So great stuff. Thanks for the question, Lori. And Rebecca, you are unmuted, and I'm sure you've got a question too. Go ahead.
I had a question. You had mentioned, Jorian, about the accessibility. So is it accessibility just for the lower units, or do they want elevators so that it's accessible throughout the whole building? Or if the townhouses are multi-level, do they need to have accessibility within them or just on the main living space?
Yeah, you have to have a minimum number of units. So for instance, we're doing a deal right now where it's 60 units and they've asked for 4 to be accessible, and they're all on the first floor. And
okay.
So if you're doing a deal that needs to meet that requirement, we would help you through that process. We would say, hey, you know what, you only need 5 units that are going to be accessible. Why don't we make these all ground floor? So we would kind of shepherd you through each one of these things that the CMHC is asking for.
Perfect.
Terrific.
Okay.
Great. And does anybody have any other questions while we've got Jorian here? And I know I'll be coming over this weekend, and I'll be at the show, the Women's Expo, and I'm sure most of you are going to come by and say, when are we going to start to look for property?
What kind of timeline is there to get the money lent to you? So once we pool ourselves together and we have a piece of property, how long does it take to get the funding in order to get started after that?
Sure, there's two parts to the process. There's the application to CMHC, and then there's the underwriting. So the application portion is something that we as brokers have spent a lot of time and effort on. When we heard about the program last year, we actually flew to Quebec, which is where it's headquartered. We met the head of the program, and we streamlined our process so that if they get a submission from us, they almost always, I mean, we've only had one negative so far out of everything that we submitted, but they know that if we send a package in, then it's a fully vetted package that it's going to fit under their guidelines. So that portion normally for a developer takes about 6 weeks. They send a submission in. It takes about 3 weeks to get designated an underwriter. Then the underwriter takes usually another 3 weeks because usually the package is missing stuff. There's a lot of back and forth. So that portion is normally 6 weeks. Our last deal, we got approved in 2 days. We actually submitted on a Friday, and we had approval on Monday. So we were able to compress that down quite a bit. Once it's been approved, then it has to go through underwriting. That is the cumbersome part of the process and something that we are not a part of, unfortunately. I wish we were more hands-on there, but CMHC has subbed that portion out to a lending company that does basically the due diligence for the underwriting, and that takes 3 to 4 months. So the whole program takes about 3 to 4 months from the time of submission till you get your first draw. So okay. A lot of people have to buy the land, and they may need some debt. So we can help you with that portion as well. So if you find a piece of land that you like, you still have to go through the rezoning process and that kind of thing. What we do is we typically set you up with a land loan. That land loan will give you enough money to buy the property, and it allows you to, get it rezoned or whatever it is you need to do to get, to that point where the project is shovel ready. And then when CMHC comes in, they take out the land loan with the first draw.
Okay.
I put myself on mute quite a few times because I've got the sneezing thing going on today. I can't stop sneezing. I don't know if it's spring and I've suddenly got new allergies. So
I was just going to mention one other thing, Liza. We were talking about, I just use an example of a $10 million deal. And so today, because bond yields were so low, I just wanted to run the numbers and see what that looked like on the debt service side. So if you were to go out and borrow $10 million conventionally, you would probably get a rate of around 3.25%, 3.5%. And so your payments over 25 years would be about $600,000 a year. Under the RCFI, if you were to do that today, and you were to set that rate at 0.96, your payments are $250,000 a year.
Wow.
$300,000 less. It's really a mind-blowing number. I like I said, I've been doing it a long time, and I've never seen bonds this low. So it just makes the program that much better. Bond yields can't go down forever, but certainly in the neighborhood where they are, if you can find a piece of property soon, I would get on the program before CMHC changes their mind. And,
Exactly. And I think one of the things that you said the other day too, that we were all talking about when we were here in Vancouver was, we don't necessarily have to buy the property outright. We can get the property under contract, go through some of the due diligence. And, depending on if we feel that this is going to be a really strong project and we've got all the support, and if we feel it's going to be something that we're going to want to move ahead with, we can either pull the plug or see how we can make that work so that we can hold on to the property while we're going through the process. So Jorian seems to have lots of ways to make this work. And the fact that it's such a low rate and the fact that you've had 8 of these done successfully, it means yeah, means that it's a pretty great way to go through it and to get started, and you've got such a good success rate. So that's awesome. So does anybody else have any other questions for Jorian?
Yeah, I do, Jorian. Lori here.
Yeah, go ahead, Lori.
So the rates are very low right now, the bond rates. What if they drastically go up in 5 years?
Well, the RCFI program is a 10-year deal. And
Okay.
so if you set the rate, today, let's say you set it in 6 months and the bond yield is 1.5, then your rate doesn't change for 10 years at 1.5. It stays put. So two things will happen at the end of 10 years. One is your building will be worth more money because your rents are a little bit higher. And two, you would have paid down a little bit of that debt. And so your chances of getting a refinance are pretty strong.
Okay, perfect. Thank you.
You're welcome.
Terrific. Any other questions? Pop them
Is
in
there
the
a
question box.
particular land size that's required in order to build? Say if you're doing 30 units or so, do they have like how many square feet they want the building to be, or how large do they want each of the units to be, or just to match what our market rent and size is?
Yeah, so depends totally. It's totally property dependent. So the nice thing under purpose-built rental is that municipalities are willing to bend their own guidelines. So if you're going to do a market condo, you might have an FSR of 1.5. And what that means is that if you have a 10,000 square foot lot, that means you can build 15,000 square feet of rentable space, which typically means 2 or 3 stories. If it's going to be purpose-built rental and that municipality is saying, hey, we really want your building here, they might give you a 3 FSR or a 4 FSR. And that really does 2 things for you. One, it makes your economies of scale a lot better, but it also makes that property worth a lot more. So it really depends on the property itself, where it is, in relation to this town center, what the current zoning is. If you're going to buy something in downtown Vancouver, you're going to pay a fortune and you're probably going to get a fairly low FSR. But if it's outside in one of the other municipalities, Surrey, Langley, Maple Ridge, over on the island, those communities are a little bit more property friendly or developer friendly, and that's where I would look.
Yeah, and so just to add to that, when we were again here last week, we were talking about some of the areas that have already kind of been earmarked. So we were talking about Mission. We mentioned that Coquitlam had its first rental building open in 40 years just a couple weeks ago. So that could start a trend. And then of course on the island we've got Esquimalt and Langford. We talked about the growth on the East Coast, and with all of the jobs and the international students that are finding the East Coast attractive, there's some housing shortages that we haven't seen on the East Coast. And yeah, who knows, maybe there'll be something in Saskatchewan and Manitoba as well. I know Deb's out there in the middle province, so she'd probably love to have something in the mid there somewhere. And yeah, that's awesome.
Yeah, most rental stock is really old. A lot of it was built in the 60s, 70s, and 80s, and then tax law changed, and there was really no buildings being built. And so 95% of the rental stock in most municipalities is really old. It's functionally obsolete, and it's falling apart, and
and it can't be insured.
Yeah, it can't be insured. Yeah, so there's almost anywhere you look.
Yeah, there you go. Cool. Anybody have any last questions for Jorian? We've still got lots of time, so don't be shy. But it's pretty straightforward, and as I say, I'll be over on the weekend, and I know that we'll be talking about this over the next couple weeks while we look at some properties. So it looks like we have answered all of the questions for now. So that's awesome. Thanks, Jorian.
My pleasure. Thank you.
Yeah. So short and easy today, everybody. Thanks for joining us, and we will sign off, and I'll see you over on the island in a few days. I'll be at the Victoria Women's Expo. We're really enjoying hearing the commercials on Ocean 98. It's me and Robin voicing the commercials, so we had lots of fun doing that, and we're getting lots of great traction with that. So it's going to be really fun, and I'll be over. I'm staying with Barb, And what else can I tell you? I'm still doing my Wild Fit thing. So you can see my green shake here. I had to give up
Ooh.
coffee this week. Oh my God, it's life-changing. I'm actually sleeping for the first time in years. There's something to this coffee thing. So yes, I'm looking forward to seeing everybody on the weekend. And Jorian, I know you and I will be in touch. And if anybody doesn't have any last minute questions, we will say ciao for now. And I'll see you on the weekend, and we'll see you on the next webinar, and we'll see you when we get Jorian in a room again, because we're now down to the application process.
Sounds good.
Awesome. Okay, bye everybody. Thank you.
Thanks,
Liza.
Liza. Thanks,
Thanks,
Jorian.
Jorian.
Bye.